You want to calculate return on investment, ROI. Step 1. Determine the initial investment. To calculate ROI, you need to know the initial investment amount. This includes all costs associated with the investment, such as the purchase price, transaction fees, and any additional expenses directly related to the investment. Step 2. Calculate the net profit. You need to determine the net profit generated by the investment. Net profit is the total revenue earned from the investment minus any associated costs or expenses, including maintenance fees, taxes, and operational expenses. Step 3. Divide net profit by initial investment. Once you have the net profit, divide it by the initial investment. This will give you a decimal value representing the return earned on the investment. Step 4. Multiply by 100 to get the percentage. To express ROI as a percentage, multiply the decimal value obtained in Step 3 by 100. This will provide you with the ROI percentage, which indicates the profitability of the investment. Let's consider an example to illustrate the calculation of ROI. Suppose you invested $10,000 in a project, and it generated a net profit of $2,000. To calculate ROI, divide the net profit, $2,000, by the initial investment, $10,000, which gives you 0.2. Multiply this value by 100, and you find that the ROI for this investment is 20%. Well, calculating ROI involves a straightforward formula that takes into account the initial investment and the resulting profits or losses. By following these steps, you can determine the ROI of an investment.